So, what's going on with the U.S. unemployment situation? Unemployment rate jumped unexpectedly upwards. So, is this a sign of a deeper recession to come? Well, let's talk about this, and let's talk about why Bitcoin is here to the rescue. So, as you can see right on CNBC, unemployment jumps up unexpectedly. That's no good. That's no good. But here's the thing. Look at the futures market. Still in the green. So is this a worry or not? You know, I was reading this headline. Obviously, whenever we hear about unemployment, people that are out of a job, right? Whenever that starts going up, that's worrisome. Because up until this point, all throughout basically 2022, 2023, we've been hearing about unemployment go down. Powell's been doing his thing, raising his rates for well over a year now, right? But he had the luxury of being able to do so because jobs were still there. Employers were still hiring. That's why unemployment has been pretty low at a 50-year low. But what if that changes? What if we start seeing unemployment rate start skyrocketing once again? What does that mean? Well, that would mean, first of all, the U.S. economy is going to crumble, which would be absolutely horrible. But also it would mean that Powell went a little bit too far. You know, that's something about, you know, all these indicators are lagging indicators, right? And something like unemployment takes way more than a single month before you actually see the totality, I guess, the results of everything. So, you know, ticking up unexpectedly is not a good thing. And if we see another tick up next month, right, and we see, say, inflation tick up with unemployment, well, then Powell's going to be in a really, really bad position. Really bad position because he can't just cut rates either, because inflation is going back up and unemployment is going up at the same time. What does he do? Does he cut rates or increase rates, right? Like, what is he going to do? That is a position he does not want to be in. Trust me, that is an unwinnable situation. But here's the good news. Even though unemployment rate went up by 3.8% this last month, well, actually, we're in September now, so I don't have to say this month. Last month, overall, it's still pretty low. So this is what it looks like. So you can see throughout 2022, we've been like hovering under 4%. But this was horrific when unemployment was up to about 15% in April. So right now, it's not a worry because it seems like we're still still low, especially because of this, right? But again, if we start seeing this tick upwards, we go above 4% next month. So we go to 4.2%, right? Then you got to watch out. Now, of course, we have the Bitcoin ETF deadline, the second deadline to also look forward to. Now that we have passed, okay, this very first deadline was actually due today, but the SEC and Gary Gensler had talked about this yesterday. I'm not going to say so much about it today, but, you know, proactively a day ahead just told everyone, no. They should have done it today, not yesterday. But, you know, that just shows you how spiteful Gary is right now. But the next deadline, just so you guys know, is in October. Okay, so that's only a month away. So not all is lost. The momentum that we had from the grayscale ruling can certainly come back if we get even one spot Bitcoin ETF approved by the end of this year. And many people think that will happen. Maybe September was too soon, but October, that could be phenomenal if it happens, right? Obviously, I don't need to repeat that anymore. We've been talking a lot about that. But in the meantime, of course, what should you do? Wait until October? No, you should just continue to do what you're doing, which is accumulating and DCAing, right? There's still articles like this that gets posted. If you invested $10,000 in Bitcoin when it crashed in 2015, you'll be able to buy a Manhattan apartment today because that $10,000 would be over $1 million today. You hear about these headlines all the time, right? And people ignore it because of the fact that It's like, okay, yeah, it's not 2015, it's 2023. So what, you know? But that's the thing. You know, you fast forward to 2030, right? You're going to see headlines like this. Had you invested $10,000 in Bitcoin when it crashed in 2023, right? You'll be able to buy this today. It'll be the same story. It never changes, right? That's why when you invest in Bitcoin, you can't measure performance just like based on a few months or even a year, because we know the 4-year cycles, there will be bad years, right? But if you look at it from a long-term perspective, 5 years, 7 years, 10 years, you'll always win in a big way. By 2030, which is 2 halving events from now, you know, Bitcoin could be at $1 million, right? Think about that. So that's why nothing really changes, right? If you're a Bitcoiner or you believe or you're trying to get involved, right? Just know that you want to accumulate long term. You want to focus on long-term investing, not short-term investing. Because if you do short-term investing, you're probably gonna lose. Long-term investing, and you just keep accumulating, keep DCAing. That's it, right? This one shows you, you know, your cost average. Had you been DCAing since the top of 2017, your average is like 11,000. If you did a top of, you know, since was it 2018, 13,000. Even if you did start DCAing from the very top of this last cycle at 69,000 till now, okay, your cost average is still around 27,000. It's not too far off from where we are now. In fact, when we were above 30, you would have been in the green already. That shows you the power of DCAing. It really does, right? So continue holding, continue to accumulate, continue to DCA, and let the gains come to you. Don't chase it. Whenever you chase something, I mean, there's a lot of sayings about this. If you chase money, right, you'll never get it. You let the wealth come to you, right? A lot of you guys have mentioned that September is a bad month. And if you look at this chart, well, that looks pretty bad. 2022 minus 3%, 2021 minus 7%, 2020 minus 8%. You get the picture. They all been negatives, okay? And if you look at August, we didn't have a really good August either, right? And traditionally speaking, August it's a bad month too. So that held. But, you know, it doesn't always, you know, I guess history doesn't always repeat, right? Because if you look at July historically was a great month, huge month, right? But this year didn't do so well either. And if you look at June, historically, it was a bad month, right? But we had a positive June. So, you know, I just want to address this real quick, even though a lot of people do tend to look at history and say, well, you know what? We got to look at history because that's the only thing we could look at, right? Derive some kind of information from it. When it comes to monthly returns, it's just, you know, anything can happen. Okay, we just don't know what's going to happen in this month. So for people that are thinking, well, this month is going to be absolutely horrible, you know what? It might not be. Or it might be. We just don't know. There's not enough data, and things change very quickly. So I wouldn't say that we will have to be in negative this month.